Hello amazing people, welcome to another segment of beginners tutorials. Today's tutorials I will be explaining two basic topics to you, which are chart patterns and candlestick patterns. These two basic topics are very important to know before you continue, before you start your your trading journey. And before I dive deep into this topic, I want to say a big thank you to you guys for always coming to this channel just to consume the new information I have for you guys. I want to say a big thank you to you guys. I truly appreciate you guys. And I'll be diving right to today's topic. And today's topic basically is a chart pattern and the candlestick pattern. For the chart pattern and the candlestick pattern, a chart pattern is a graphical representation of price movement by using series of price on the charts. On chart pattern, we have two different type of chart pattern. We have the reversal pattern and we have the continuation pattern. So the reversal pattern has the basic purpose of it, and the continuation pattern has its own basic purpose. But first of all, I will discuss about the chart pattern. First of all, by the right side on the screen, we have the double top and the double bottom. The double top is what we look for at the resistance level, and the double bottom is what we look for at the support level. If you follow this tutorial from the beginning, you should understand what a resistance and the support level mean by now. The double top pattern is meant to be looked for at the resistance level, just for you to take a sell position. And what does the double top signals to you? It sends an information, a possible reversal pattern. Okay, it sends an information of possible reversal pattern. And how do we trade this double top pattern? We wait for price to break this neckline. This is the neckline of the double top. It looks like M, right? So now, once the M is being formed, which is the double top, known as the double top, is being formed at the resistance level, we wait for price to break through the neckline. Then we can take a short position. Okay, just to complete the left leg rather. Okay, we take a short position just to complete the left leg. That is what we use the double top pattern to do. Now I'll move on to the double bottom. You should look for these double bottom patterns at the support level. Using this double bottom pattern, the only thing you need to do is wait for price to break for this neckline. Once the price breaks through this neckline, then you can take a buy position just to complete the left leg as well. So this two pattern is used to take positions in the market, and it sends the signals to you that there is about to be a change in the direction of the market. And this is what it looks like on the chart. By the left side of the screen, you can see the double top pattern, and by the right side of the screen you can see the double bottom pattern. These two patterns are used to take positions in the market, and it sends a signal to you that the price wants to reverse. So I'll be moving on to the next one, which is the head and shoulder pattern. We have two type of head and shoulder pattern. We have the head and shoulder pattern and the inverse head and shoulder pattern. That is a flip of this one, is called an head and shoulder pattern. So this head and shoulder pattern, basically we look out for it at the resistance level. So, and we look for the inverse head and shoulder at the support level. This head and shoulder pattern creates the left shoulder, creates the head, and creates the right shoulder. And while creating this left shoulder, head, and the right shoulder, the price will form a support level for you. The support level is basically used for taking a position. Once it forms as a resistance level, the next thing to do is take a sell position. Okay, so at the inverse head and shoulder pattern, that do forms at the support level, the only thing you want to look out for in this pattern at the support level is to buy, right? And as a trader, you need to wait for the patterns to form at the support level. The left shoulder will be formed, the head will be formed, and the right shoulder will be formed. Once this basic pattern is being formed, you will wait for the price to break through this neckline so you can take a buy position. It's just as simple and straightforward as that. So having explained these basic things about the head and shoulder pattern, this is what it looks like on the chart. On the left side of my screen, you can see this is the head and shoulder pattern that forms in the resistance level. And the what's it called the right side of the screen is the inverse and the shoulder pattern that forms at the support level. Okay, just basically look for this basic pattern so you can make a proper decisions on the market. This basic pattern that I shared with you does happen frequently on the market. Okay, it does happen frequently, and if you can study and master this pattern, you will definitely make best use of it. So I'll move on to the continuation pattern, which entails the bullish and the bearish flag pattern, and the what falling and the rising wedge. I just want to give you two basic patterns that I want you to watch out for on the chart. There are a lot of what's it called, continuation pattern, a lot of continuation pattern, and I just want to show you these two basic continuation pattern because they occur more frequently on the chart. Okay, so the first one is the bullish and bearish flag pattern, and the second one and the second set I will show you is the falling and rising wedge. But on my screen is what the one you can see is the flag pattern. The one at the left side of the screen is called the bullish flag pattern because you see the price is coming from the support level going up. You see the price is coming from the support level, so it forms a flag pattern and what it continues the movement. This is what's called a bullish flag pattern. And the next one is the bearish flag pattern. You can see it's coming from the resistance level, which is anyone who takes the trade from the resistance level will be selling down. Okay, once you're selling down, the price tends to correct. This basic correction is known as the bearish flag pattern. It's just the continuation one, just for the price was to continue downward. That is the reason why we call it a bearish flag continuation pattern. So this is what it looks like on the chart. As you can see, by the left side of the screen, it's the what's it called, the bullish flag, and by the right side of the screen is called what the bearish flag. So this basic pattern, just look for it on the chart in case you might miss a trade or you might be in a trade. Once you see this particular pattern, you should know it serves as a continuation pattern. So I'll move on to the falling and the rising wedge. The rising wedge is known as a continuation pattern, and the what's it called, falling wedge is also known as the continuation pattern. So when the price is moving from the resistance level to the support level, we should be expecting a rising wedge to form. And this is an example of the rising wedge. And the way we trade the rising wedge is we wait for price to break through the what's it called, the trend line. We use the trend line to connect price. Okay, you see the bottom of this price right about here. We use the trend line to connect it. So once there is a breakout on the what's it called, the trend line, once there is a breakout on the trend line, we take a short position just to continue the trend. And the second one is the falling wedge. We take this falling wedge pattern forms when the price is in a bullish trend. So you see when the price is in a bullish trend coming from the support going to the resistance, it forms to serve as what, a continuation in trend. And the only thing we want to be looking for when we see this type of pattern is we want to buy. And the only way we can buy is we wait for price to break out of this trend line. What do we use this trend line to do? We use it to connect the price. We use this to connect a sequence of price. Okay, once the price has broken out of this trend line, then we look to buy. So these two basic patterns that I explained to you, which is the bullish and bearish flag pattern, rising and falling wedge, these two patterns occur more on the chart, and you need to look out for this basic pattern. So I'll be moving on to candlestick pattern. We have series of candlestick pattern. Okay, we have series of candlestick pattern, and we have series of candlestick formation. Okay, but I want to give you two basic ones that it's most important in trading. The first one is the bullish engulfing candlestick, and the second one is the bearish engulfing candlestick. So the bullish engulfing candlestick, as you can see on the screen, this is basically the bullish engulfing candlestick, and this candlestick pattern, we do look out for it at what, the support level, just to add to our confirmation if truly the price wants to reverse. Okay, so the bullish engulfing candlestick, this is an example of it on this trend. So we look for this basic pattern on the what, support level, just to to take a long position. And the bearish candlestick, we do look for it at what, resistance level, just to take a short position. Do you understand this basic thing? And this is an example of the bearish candlestick on the screen. This is an example. You see these two candlesticks that I explained to you, the bullish and the bearish, you need to watch out for it. So once you see them at the resistance level, it will give you more confirmations as well to to give you more confirmation that the reversal, truly a reversal, wants to happen in the market. So I'll be moving on to the next one, which is a candlestick formation. It's called the candlestick formation, and the candlestick formation is basically the evening star and the morning star. You see, this evening star and the morning star comprises of three candlesticks. Okay, this 3D candlestick, and this is an example of it. I will give you the first one as the evening star. This is what it looks like on the chart. You see this candlestick formation. If you see it at your resistance level, it's a confirmation for you that the price wants to reverse. Okay, it's a confirmation for you. And I will move on to the what morning star. You see this morning star as well. Formation happens on what the support level. Once you see this formation on the support level, it gives you a solid confirmation that the reversal, truly the reversal wants to happen. So this basic formation candlestick that I give you, you should look out for it. So there are a lot of formation candlestick, but I have to give you this basic one because it occur more on the chart. So, and another thing that I want to explain to you guys is, if you want to know more about the candlestick pattern that we have and the candlestick formations that we have, there are a lot of it. So you can make a personal research on your own just to know more about the candlestick pattern and what candlestick formation that we have. But these two basic ones that I give you occur more on the chart, and it will definitely give you a signal or information that this particular thing want to happen in the market. So guys, I want to say a big thank you for sticking to the end of this video. And one more thing, don't forget to like, subscribe to my YouTube channel. And by doing these basic things, it will show your level of support to my channel, and it will help my channel grow more. I will see you on the next class. Thank you guys. Bye for now.